Well, good morning and welcome back to the Broadcast Retirement Network. I'm Jeff Snyder and this is BRN AM for Monday, August 31st, 2020. And our top story today, we'll get an update on commercial real estate and real estate investing. Joining me now to discuss this and more is Deidre Woolard. She's the editor of Million Acres. Deidre, welcome back to the program. Great to see you. Thanks for joining us this morning.
Thank you for having me back. It's great to be here.
It's great to see you. So let's jump in. We're going to talk about commercial real estate today. It seems like transaction levels are actually far down for the Q2 2020. What can you tell us?
Yeah, transactions are down by 68%. It's been a really tough quarter for transactions. Commercial real estate in general is not having the same experience that residential real estate is having right now.
So what does that, when you look at businesses, people working from home, I would imagine that, and we're going to talk about loan delinquencies in the second part of our show, but just in general, I mean, people are working remotely. That's going to have an impact on commercial buildings, people in New York, Chicago, and even in the suburbs.
It's having a huge impact on New York, on San Francisco, on Seattle. Some of the companies that have invested in these really large campuses are now reconsidering their plans. One of them, REI, which has a huge campus in Bellevue, is now putting the campus on the market before they even move people in.
That's really interesting. So they built it. Now they're thinking about, we're not going to pull people in. Now we're going to sell it. But Deidre, I'm just wondering who's going to buy that? I mean, is it just going to be an investment property? I mean, when you take a look at your crystal ball, and I don't, we're not going to hold you to anything, but I mean, is there ever going to be a time when we actually all go back to work in an office? Does it happen post-vaccine? Thoughts there?
I absolutely think we're all going to go back to the office, and it may not take the vaccine. I definitely think right now we are in a position where a lot of people are being more flexible. We've heard about this urban exodus and people leaving, but I feel like overall, from the surveys I've read, and Gensler came out with a good one, people actually enjoy going to the office. We enjoy talking to our coworkers. We enjoy collaborating in person.
I think we are social creatures, right? So we're social creatures in our personal lives. We're social creatures in our professional lives, and that collaboration is meaningful to your point. What does this mean when you look at this transaction level? What does it mean for investment vehicles like REITs? I mean, we're talking about direct investment, which is very important because but it's very illiquid. What does this mean for REITs, real estate investment trusts?
Well, I'm a REIT investor, and it's definitely been not the best first half of the year for REIT investors, although it depends very much by sector. So retail REITs are still off on their valuations. Hotel REITs, as you might imagine, are having a tough time. The REITs that are doing well right now are industrial REITs and data center REITs and telecommunications REITs, partly because those are the areas that we've all seen that we need so much as we've been going through this COVID-19 crisis.
Yeah, so people, obviously, you need data centers because we're all doing things in the cloud. People are using Zoom, Skype, Teams, Google Meet, et cetera. Don't want to leave anybody out there. So there's a lot of data use. What happens to the mall, Deidre? I mean, malls here in New Jersey have started to reopen. I don't know, my wife and I have not been to the mall, just trying to social distance and keep away. But what ultimately happens to malls? I mean, they were already kind of dying. I mean, you hear about Sears, JCPenney's, others that are having some real troubles. Do they see a resurgence when things kind of go back to some kind of normal?
Well, we're seeing a few factors here. So we are seeing that traffic has been pretty strong to the malls, but that may just be some pent-up demand. Another thing that we're seeing is how malls are considering the future. So Amazon fulfillment centers are maybe taking over some of those anchor stores. A lot of malls are looking at putting in grocery stores. So we're seeing a sort of transformation of the mall. Obviously, we've all seen a lot of those Chapter 11 bankruptcies that have happened this year. But we're also seeing that some of those are actually being bought by the malls. So we're seeing Simon Property Group is currently partnering with Brookfield to potentially buy JCPenney.
So there's obviously a migration to this different structure. I read over the weekend that Amazon was actually thinking about relocating some of its staff out of Seattle. And I don't know if that is related necessarily to the COVID pandemic, if it's some social unrest or whatnot, but are organizations that are, for example, based in Silicon Valley or based in Seattle, Washington, for example, are they realizing that we need to spread out in order to mitigate some of the financial pressures and also pressures from pandemics and elsewhere?
Well, in the case of Amazon in Seattle, part of that is Amazon's ongoing frustration with Seattle's taxing. So that's part of that issue. But obviously, in both Silicon Valley and Seattle, a lot of those big tech companies have told people they can work from home through 2021. So that gives people the chance to find a place to live that's potentially significantly cheaper. Amazon is currently looking at Tacoma, which is about an hour away from Seattle. The median housing price there is almost half of what it is in Seattle. So that's a real difference for those workers.
Yeah, I would say so. And I've also heard that and this is not really a real estate conversation, but I think it all kind of ties together, that there have been some adjustments to compensation, or at least talking about that. Like, why would you earn a Silicon Valley wage if you're living in Tacoma or you're living in another part of the country? Deidre, what does it mean? What does this mean for like tax abatements? A lot of governments, local and state governments, create tax incentives for people to build buildings. We saw the most famous one, which is Amazon coming to, I want to say, Virginia and potentially to New York. We all know what happened there. But do you, and we know that, by the way, state and local governments under a lot of financial pressure as a result of this virus. Will some of those abatements and tax incentives go away if they say, hey, look, we're not going to build there. We're not going to have a lot of our staff there?
That's definitely a concern. One of the things that I'm thinking may happen is that we will see a lot of smaller headquarters. So you'll see projects in more cities, but they will probably be smaller in scope, and there'll be less of that heavy negotiation like we saw with HQ2. You probably saw some of those proposals. I mean, cities were really just throwing in really huge incentives to try to get Amazon to move there.
Yeah. I mean, and I guess got to wonder, will those incentives be the same for other, to attract other businesses? I mean, it's not a zero-sum game where someone wins, someone loses. I mean, that's not the way the system works. And so if people build businesses or build buildings in a local area, that's good for the economy. It creates working. It's a great name recognition for bigger brands. I'm just wondering how that kind of unfolds.
Yeah, I'm thinking we may see smaller campuses, more campuses, but smaller size. So that means less jobs. So the tax incentives that cities and towns would offer would obviously be smaller because they usually track to how many jobs are being created.
Yeah. Well, Deidre, I want to go to a quick break. When we come back, we're going to talk to Deidre about commercial real estate loan delinquencies. You're going to find this real interesting, so you're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
If you are like 58% of Americans, you didn't go to college. Or you did, but never finished. Maybe it's the thought of a big, intimidating campus. At Independence University, all classes are held online. Maybe it's the thought of being alone in a sea of students. At Independence U, you'll get a personal support team to help you every step of the way. Maybe it's the cost of all those books and supplies. Online means no books to buy. We even give you a new laptop and tablet to keep when you graduate. Maybe your life doesn't fit typical college classes. At Independence U, our online college fits your schedule. Let's meet a few students.
Independence University held my hand through the process.
Don't be afraid to take the leap because it has changed my life drastically.
Just take the first step and you can do it. If I did it, you can do it too.
At IU, there's no barriers to your degree.
800-535-9916.
Welcome back. We're talking to Deidre Woolard. She is the editor of Million Acres. Deidre, thanks so much for staying with us this morning.
Thank you.
So let's shift from transaction levels down, obviously concerning for a lot of reasons, but there is some hope in the future that we'll return to some normalcy. Now let's shift gears to delinquencies, because people may not be paying their rent or have not been paying their rent or have not been paying their payments for commercial real estate. What can you tell us there?
The delinquencies have been down. They're stabilizing a little bit, but one of the things that I'm looking at right now is the potential of a second lockdown and what that could mean for both hospitality and retail specifically. Those are the areas that are most at risk. With office, you generally have longer leases, maybe 5-10 years, so that becomes less of a concern. But for hotel and retail, there's definitely a concern about some of those loans falling delinquent in the coming years.
So will we know some of the brands that may be delinquent? I mean, we hear some of the major hoteliers, those chains saying like, hey, we're not going to make payments. Is that what you're hearing?
Well, one of the things that we're seeing is that these larger brands, certainly we've seen this with retail brands saying they're not going to pay rent to like a mall or something like that. And so when that happens, then those malls start to struggle and then they can't pay their loans. So it's really this sort of cascading effect that happens. And,
would you expect that, we're not necessarily talking about office space, but I mean, in Manhattan, for example, near where I live, I mean, everyone's working from home. So I think, and I know those are longer leases, 3, 5, 10 years out to get the better deal, but people are clearly rethinking their work from home, their work from the office strategy. Where does that leave buildings? I mean, where does that leave in terms of receiving the rent, the lease payment? Are they receiving lease payments, even if they're not being occupied?
They are right now, but you're also seeing a lot of renegotiating happening. And so you look at things like WeWork and co-working, obviously that's taken a hit here too. So there's just a lot of concern about how much space companies are going to need, how they can reconfigure that space to bring people back in a safe manner. One of the things that we've been watching is these reopenings, even with schools and universities. You're seeing universities open up and then close. That's sending a clear signal to offices as well that if you open up once there's a case, you may need to close down again. And that's really making offices and making companies feel very, very hesitant. A lot of companies that were thinking, okay, we were going to open in the fall, are now really pushing that back to 2021.
Yeah, I'm thinking like, you depend on, as a owner of real estate, you depend on those lease payments or those rent payments. If you're a landlord, for example, and you plan out, typically in a commercial setting, my understanding is you plan out capital expenditures years out. You sign contracts to do that. What does that mean? What does this mean overall to things like construction workers? I would imagine that we're probably not building any new malls right now. Are people rethinking office building construction, some of these other items?
That is a really good point. Capital expenditures will probably fall a lot, especially in retail. Some of those major mall REITs like Simon Property Group have already said we're scaling back our development or our redevelopment. Projects that we're planning to be updated are not going to be updated. So for example, if an office building was planning to redo the lobby, they may rethink that. One of the other issues that we're seeing with those office buildings too is how many of them have ground floor retail. All those coffee shops, all those little restaurants that were really benefiting from that daily traffic are struggling a lot, and they're not able to pay their rent.
And we've seen, I mean, 100,000 small businesses have to shutter around the United States because of this. And I think, to your point, it just shows that domino effect. On Monday, Deidre, we had Rick Seltzer from Higher Ed, and we were talking about these reopenings that I think you mentioned, where they had to reopen then close. But there's an impact to student housing, because a lot of the student housing and the refurbishment and the capital expenditures, those are contracts that were signed, and there are, I don't know if they're leases, but there are capital expenditures that are being made. Construction is going on. That would have an impact not only to the university in terms of housing and housing payments, but also the future. I mean, what are you going to do? You've got to improve. Students today are looking for even better student housing amenities as well.
Right. So you have a large REIT called American Campus Communities, and one of the things that they do is they have these contracts with schools to build out student housing. So they're really seeing the impact of this. They have a lot of contracts in California. And obviously, we've seen what's been happening with California with reopenings and closings and things shifting, and that's going to continue to happen. So it has that widespread impact.
Deidre, not to confuse things further for myself or the audience, usually it's myself that gets confused, but what do you think about internationally? I mean, are there parts of the world doing better with commercial real estate? We've been talking thus far about US, but China, other emerging markets, Russia. I mean, are there areas of the world that are possibly doing better than we are, and we should look maybe are more positive for investors?
Certainly, different areas are doing better with the containment of the coronavirus. So that is an issue. China's economy has bounced back fairly strongly. Real estate over there has been going down in recent years, though, so because they had a lot of building. And one of the things that is happening is that in China too, you're seeing a little bit of an urban exodus, not to the same extent here, and it doesn't get reported on as much, but there is a little bit of that concern that's happening about how many people should be in a particular area.
And what about places like Italy, the UK, which I know is dealing with Brexit? In addition to this, I mean, they still have to negotiate that Brexit deal and pulling out of the European Union. Are some of those countries, some have been harder hit than others, but are they seeing some more commercial resurgency? Are they dealing with things a little bit better?
Certainly that is an impact for London with Brexit, is that one of the things we saw right after that was a lot of banking companies were moving to other places. They're moving to Germany, they're moving to France. So that is definitely a concern. I would say that overall the economy is still struggling worldwide, and that is having more of an impact in other countries. Here, it's more about the impact of the coronavirus. Over in Europe, it's more an overall economic dip.
And in terms, bringing it back to the States, or the United States, I should say, or the States, depending on where you're from, they refer to us in so many different ways. From a banking perspective, I mean, a lot of these lenders, I mean, they take big loans for capital purchases. And I know we're not necessarily, a segment's not about banking, but banks, people who own the property or are lending to construction companies, they've had to probably taken a big hit as well here in the US.
Well, one of the things that we're seeing is that banks are becoming more cautious. This is happening on the residential side too, where underwriting is getting tighter. It's definitely happening on the commercial side. If you have a new project that you want to get funded, it's going to be looked at a lot more carefully, especially if it's something like a hotel or a retail project or something that's going to be getting a lot of, that you have to have leased up. There, even an office building, there's going to be that extra level of concern because it's not necessarily a sure thing that you will be able to find those tenants once the building is completed.
Coronavirus is a day-to-day, hour-to-hour, minute-to-minute thing that we're all living through. And so we're adapting on the fly. Businesses are adapting on the fly. We're talking primarily right now about Q2 performance, but what are some of the things that you and the team at millionacres.com are looking at going into Q3 and Q4? I mean, clearly you're looking at things like delinquencies and transaction levels, but are there any economic indicators that you're keeping top of mind?
Well, we're definitely looking to see what the government does. So obviously there's going to be a second round of relief at some point here that's going to get decided on. There are also a couple of different acts that may benefit commercial tenants. So most of the acts that we've seen have benefited residential tenants, eviction moratoriums and things like that. But there is also an act in Congress called the HOPE Act, which deals with support for small businesses and commercial tenants.
Well, I know a lot of people have their fingers crossed that Congress can get a deal done with this second or third or fourth stimulus. And I think it's going to help out a lot of people. And I know commercial real estate, a really important sector. We'll be watching it very closely. Deirdre Woolard, always a pleasure chatting with you. Thanks so much for joining us on the program this morning. And we look forward to having you back on very soon.
Thank you very much.
And that wraps up this episode of BRN AM. Have a topic of interest or someone you think we should talk to? Drop us a line. And don't forget, for all the news in retirement, markets, technology, personal finance, and more, check out today's edition of The Morning Pulse. So until tomorrow, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.